Welcome back, everyone. It's me, Daniel, with moleinvestments.com. Mole Investments. I'm just kidding. Daniel with vintagemagic.com. But look at this crap. Look at these little mounds right here. Those little black things. Those are actually all mole mounds. We are having a mole issue in the backyard. So for those of you who are mole killing experts, please tell us in the comments below, what the hell do we do? Because it's literally like a mole mine. Literally, like it's like the DMZ right now. It's like little mole mine areas literally everywhere. All right, so it's Finance Friday. I wanted to wish you guys all a great weekend coming up, but this video is all about. You guys know what's all about. It's all about the potential American worldwide recession, and what do we do if it happens? Because we're all waiting on the sidelines in cash, ready to go. All you greedy investors out there, who has been saving all their money, who has been listening to me, Rudy, everybody else, everybody, Edwin the engineer, anybody who has been listening to us, you must have cash ready to go to be purchasing at times when they are low. A lot of times people like to buy when it's high, and they don't understand that the buy opportunities are actually when they're low. However, the caveat is the selection of what you can buy sometimes is really poor when it's really low. Because the people that are selling generally are people that are over leveraged. All right, first things first. The last few days, the stock market has been hit for nearly 1,300 points, the Dow Jones, and the NASDAQ has been pummeled also. And it's probably taken about, I don't know, like 6% or so percentage points, plus or minus, from each index, probably 7% or so in the NASDAQ. S&P hasn't been doing that well either. And basically what this is signaling in these last 2 days is kind of what my friend Edwin the engineer has been talking about. The rate of the interest rates have been going up. And the idea of interest rates going up actually produces a debacle into the system. I'll put a link below of one of his great videos about how it works, because he's the engineer. I'll let him analyze. I'm more of the comedian, bullshit answers, not really serious. No. I am serious. I am serious, actually, in this video. I want you guys to hear me out. This is a very serious message, and I'm not kidding. I want you guys to understand. 2 days of sell-off in stock market does not necessarily mean a recession. The definition of a recession, I believe, are multiple quarters of GDP loss or something. You might want to research that. But the idea of a recession really means multiple sectors, in my eyes, like real estate, obviously the interest rates is a trigger, the stock market, bonds, gold going up, right? So there's trends. If these factors, and you call these trends early, you can make a shitload of money, right? Because you're a smart investor. You've been watching my channel the entire time, and you realize that I told you guys in the very beginning to not over leverage yourself. Always have cash on the sidelines ready to go, either buy magic collections, people that are needing money, have it ready to go. For those of you who do not have money ready to go, this might be a little difficult for you guys to stomach. So let's talk about magic and what happens if this becomes a global recession, if it leads to that point, and should you be preparing? So first off, should you be preparing? Because that's the first thing. I actually think that it's smart to prepare if you haven't already. For those of you who have not prepared for a possible recession or a pullback in the stock markets, the equity markets, the bond markets, increase in gold prices, downward spiral in real estate, job losses, people laying off stuff like that. I'm not saying it's going to be like 2007, 2008 levels, but I do believe there is a downward opportunity to buy if it happens. Now, there's a difference though. There's a difference in how it works from magic and, let's say, all these other basic, there's normal equity markets like real estate, stock market, bonds, whatever, right? See, the thing is, Magic the Gathering is a luxury collectible game. And you have to think about it as, and think about it, I'm talking about old school, I'm talking about vintage, high-end cards and stuff like that. Okay, that's what I'm specifically talking about. Now, I would kind of rank them on kind of the things we've been talking about before. You have like the played cards, ungraded. You got the nicer, the nicer mintier cards to play with. We also have, like mid-level old school cards that are graded, and then you have the high-end tier Power 9, the big dogs, and then you have the ultra high-end, the Quad Plus, and the Quad Plus Plus. You know who you are. So there's categories. These investors all are in different financial positions. So if you're investing, you need to think about each financial position of each type of investor, because as a seller of these cards, I actually analyze this, before I make certain moves to sell or buy or whatever. So first things first, number one, for those of you who like numbers, my feeling on the people that are in let's say the people that are barely into legacy, kind of, let's say, because I focus on Eternal, right? Legacy, starting out old school, that kind of market. Those players have dual lands, revised dual lands. Those people have, maybe some foil cards here and there. Probably we're looking under 10,000 to, let's say you're the $20,000, $10,000 portfolio range. So under $20,000 portfolio range. I would say you have the highest number of risk in sell-off quickness, because those individuals, and by the way, I'm going to caveat this, I am not insulting people that are doing blue-collar work. God bless you. We need everybody out there working. But generally, those people are doing blue-collar jobs. So those people are at risk in the sense that, think about this, from their demographic. They're probably, they bought into these cards with their credit card, maybe retail, trading from other, other people in their store, whatever. They probably aren't the best savvy investors. They're just into it to play the game. They love what they're doing, right? They want to play the game. But unfortunately, they are at risk because their personal life may not be the best. Most people at this level tend to not have a lot of cash on the sidelines. They also don't have a lot of reserves for, like their car breaks down, or if I lose my job. And in the case of a recession, your job and where you live and all that stuff generally matters the most. I also don't think these people actually have a home in the sense that they're renting. They're not actually buying a home yet, partly because there's a transition there. They have to save up, if you have a $500,000 home, you have to have a 20% down loan, which is $100,000 cash. And these people are probably working towards that. So I don't think that $20,000 and under demographic has that kind of capital. So I would say that this type of area would be the most risk. Beginning stage old school players, and especially legacy players. Legacy, I'm going to focus on more like dual land, stuff like that. People in that world essentially are at the highest risk. Number two, actually, hold on a second. No. All right, guys, I'm right back. Sorry about that. Actually, what happened was, you'd be laughing, Nick just took a bath, and he's running around naked in the backyard. So, back to the topic. All right, so we're talking about kind of that first tier I was talking about. The biggest risk are those legacy players, they don't have a lot of financial, savings, stuff like that. They're probably working a job where they're trying to build up their career, that type of thing. All right, next type of at risk, or next type portfolio tier I would think about is probably that over 20, probably that 50K range. These people are more of the early vintage players, or you could have vintage and legacy. 50 to 100K. Let's just say 100K or less. That's what I would say. I mean, I'm not saying less like 20, but in that range. Higher value, like Power 9, have all the dual lands. You have different kind of old school cards, possibly this type of range. I find that these collectors and investors tend to be in the business of not quite fully investing. They might be dabbling their investing. They might be working their way in their portfolio. These might be the smaller level traders, investors that are starting out in some way. But I feel like in the player side, these people tend to have a little bit more white-collar jobs. Might have a beginning engineering job, or you might have a wife, a kid. You make $100K a year, but the reality is maybe even 100, 150K a year, right? Or maybe 80K a year, something like that. I would say that these people have some savings. They have a car. They might have a mortgage. They actually might have a mortgage. They might have other investments, 401K, etc. These people in this idea of a recession actually, and in my opinion, would also be at risk. I say this because, and I'm going to all tie this in here in a second because I'm going to make this video. Okay. I'm going to tie us all here in a second about the at risk and why I think there's a risk, because what's going on is at this level, these people are still trying to, they don't have the biggest nest egg. Their jobs are sometimes entry level. They're not have a ton of experience. There also might be some management in retail. There might be some mid-level management, stuff like that, accounting. So their jobs are not necessarily at risk fully, because in a recession, you still need those kind of jobs. They're not quite blue collar, but even with, remember in a recession, companies have to downsize their workforce. And in the case of white collar jobs, departments will shrink. Customer service, sales, operations, whatever it is, whatever industry you are, recession, corporate companies actually make less money, less revenue, less profit. In result, will become into job losses. And in the case of the recession, in this scenario, the people in this tier have the potential to potentially lose that. Also in this tier, I talked about people that are starting Magic business. These people, if they're doing it full time, they're trading investments and stuff like that. These people also are at risk because their portfolio, I'll share with you in a minute why all this ties in, is always kind of in the teeter tatter. They rely a lot about small margins or closer margins. They need about in quick sales. They need quicker transactions. So they work off of 10, maybe 20% margins in some cases, maybe 5%, just to move it fast though. In the case of a recession, cards will move slower. All right, so let's go into the next few tiers. I call them more about, let's say you have more expendable income. You are more comfortable. You are the tier that, and I'm not, just because you make like 150, 250K, $300,000 a year, which is, very rare. It doesn't matter, because you could still lose your job and you could still have a really bad retirement program and you don't have a lot of cash saved up. So all this doesn't really matter how much you make. It's more about how you invest in your personal life. So if you are an individual that has 6 months to a year of your salary already saved and just emergency fund ready to go. If you have retirement, you're not leveraged where you have to sell your retirement. If your job, let's say you lose your job at any point, you can live off this 6 months to a year kind of safety net and not have to start selling a thing. I think that's pretty good. Not even touch your retirement. So the people that are like more well off, and I'm not talking about the whales of Magic or this type of financial end. The people that are probably more in the case of several $100,000, I'd probably say like $300,000, $400,000 of investments of Magic. They have a wide range portfolio. They probably have several $100,000 in savings. They might be in high level management. They might be in a top tier engineering jobs. These people have families. They have mortgages. They might have multiple houses, investments, cars. So it's a little tricky in this one, because in one case, these people could actually have a great amount of savings for a downturn and an investment opportunity for a downturn. But at the same time, they might be people that are over, leveraged. They might be leveraged so much. They might have gone too crazy in different, like they might have bought a speedboat. They might have bought a Ferrari. They might have bought things, too many nice things that are depreciable assets that really don't go up. And when you need to sell them in a time of a recession and you need the money, it's not going to be good. So I would say that the key element here is how much money have these people saved in general. But these people generally are more comfortable, right, in the Magic world. The last but not least are the whales. The ones that are sitting there with hundreds of thousands of dollars, if not millions of dollars, sitting there just laughing at everybody. The people like, well, I don't know if Rudy's quite there yet. You know, he probably's, you know, probably there. I would say Rudy's in there. I would say Rudy's right there in the Dolphin-esque category, the Miami Dolphin category, because he's in Jacksonville. The Jacksonville Jaguar that flies in the water because he's like a water animal now. You know, he's quite there. He's like a Jacksonville Jaguar whale. He is there because the thing is, someone that has cash flow coming in, someone that has leverage in multiple different assets, right? Someone that has the ability. I would assume Rudy is a great example of that. And, you know, he's probably the most well-known YouTuber for talking about Magic Finance. And I would say he's leveraged that way. I would say he's probably in that case. I mean, I'm not talking about myself because I'm a business. I'm definitely leveraged that way too. I'm ready for a downturn. And I'm actually, if a downturn happens, I would just buy more cards. So let's talk about now what should you do, because you talked about these 4 different scenarios, different profiles, if you would say. And I feel like the key thing I've noticed is that in a recession is with Magic, for the older stuff specifically, is if you are leveraged where you can buy these goods at a lower price, if you think of a mindset of a richer person, that, wow, the cards went down, and or this artwork is now for sale, or this person needs the money, don't feel bad for these people. You know what I mean? Like, it's business, right? People will have to sell their collections. They're going to have to take a loss. It will be a buyer's market. Do you understand what I'm saying? It's a buyer's market. Because what will happen is if there's desperation sells to save their home and save their job, or not save their job, but, you know, save their home and save their kids' assets, retirement, you know, the wife is unloading tons of pressure on them. Like, why do I have all these Magic cards? But we're selling our cars. We're selling, you know, I don't have my lifestyle. I can't go to the spa. I can't do anything. Do you see where I'm going with this? I mean, we can't go to the places we eat anymore. We're eating out of, you know, Crispy Crunch or, you know, Captain Crunch or whatever. We're eating, you know, we're eating the crappiest foods, not organic anymore. If the wife, girlfriend, whatever gives you that kind of pressure, people, trust me, Magic the Gathering cards are going to be sold like crazy in those type of environments. But the people not over leveraged, the people with cash on the sidelines, ready to go, they will buy. They will buy them, and they will buy them like a tomahawk. Because the thing is, you know, I have a feeling, the question is, how many people in this world in Magic are just waiting for a buying opportunity? I have to say that since the 2007-2008 recession, there's actually more people that I've spoken to that have expendable cash ready to go. They are begging. They are hoping to God that it happens. And so I'm not talking about people that have cards to trade in to BUYLIST, to then have cash, to then buy lower cost cards. Because that's not the way it works. Because if the market does tank, the BUYLIST market will just tank also. Vendors are not going to go pay full retail prices as in today's prices. If there's a recession, they're going to pay much lower. So you have to understand, it's the people with the cash on the sidelines. Cash, Benjamin Franklin, ready to go. So I think I covered all of the dynamic there. I will leave you on one interesting point. The idea of a recession, and you know, also the question also came up: when will the recession happen? You know, like when will it happen, Dan? You know, look, this is a Finance Friday. I don't know when the next day it's going to occur. I don't know when maybe it happens next month. I don't know, next week. I don't know, but I would predict that there would have to be a series of events that would have to happen. And I think it's really important that you keep track of the news, keep track of the events, not be crazy about just the stock market going down here and there. It's more about the systemic problems. Is there scandal? Is there issues with the markets? Is there really bigger concerns that are, you know, uncertainty? Markets don't like uncertainty. And if you can observe that in different markets, then you're going to have a step ahead. So be aware of the news, be aware of all of the research, you know, be involved in all the market right now. But the last thought I had for this Finance Friday was, it really comes to me in mind, like, even though if there's a downturn, there are a couple things that will not change much in pricing. In fact, surprisingly, I actually think there are a few things that will actually stay the price or go up higher. And I feel like the only thing that really would matter, that's right, is high-end artwork and alpha lotuses, beta lotuses, unlimited lotuses in some way, the higher quality ones. I also feel top-end grade cards will probably not change, not at all. I also feel like the prices, the super top-end, we're talking about super top-end, I don't think those would change because the people in those categories already are so well leveraged, so well protected in their savvy in their financial sense. They are ready to buy anytime. And if there's any low-hanging fruit of BGS 10s, BGS 10s or high-end artwork or whatever, and there's a downturn and a collector has to sell, those collectors will always be ready to go. All right, guys, I appreciate your support. SA contest, it is ending on the 15th. That is Monday. After that, the 16th, you're too late. Link will be below. Sign up for it. It is an opportunity to meet Rudy, myself, at Orlando 2019 next year. All expense paid. Details are bottom below. I want to hear your thoughts on this very important topic. It's a very long topic. And I'll talk to you guys soon, and have a great weekend. Be safe, everyone. Take care.